hit it off with a new podcast episode.
Yeah, congrats on the new job. Round of applause.
Thank you very much.
No, it's hard to get one of them.
It is, yeah.
But yeah, so this is a new year for us. This is well, not just for us, for everyone. 2025. How you feeling about that?
I'm feeling good. This is what? This is going to be year 5 for the podcast?
That's crazy. Our baby's 5 years old.
Yep.
That's crazy, crazy, crazy. Yeah, it's another exciting year for us. 2024 went by like so fast to me.
You did, yeah.
Like, I can't believe it's over, and then we're already like the third day in it.
Mm-hmm.
No, today's January 2nd.
Well,
Whatever.
I think as you get older, the years just go by quicker.
I know. I'm saying, got to be something like that though. But yeah, on this episode 61 of Stock Talk, we do have some guests with us today. So guests, you all might remember one of our guests, Chris. But Chris also brought one of his friends, Isaac, to the show on us as well. So what's up, y'all?
Hey guys, good to be here. Thanks for the invite.
So
Yep, back from I originally came in on episode 50, talked for a little bit, and circling back for another round.
There you go. Nice to see you again. Nice to see you again. But real quick, how was y'all New Year's Eve? Y'all do anything exciting, anything like that?
I had a blast. You know, I was telling myself I would be in bed shortly after midnight. Then I got home around 3:30, so I had a little too much fun, but it was a good time. I enjoyed it. Was at a few friends' house, and then one little dive bar that I really enjoy, and it was a good time.
I mean, that is kind of around 12, like if you think about it.
Yeah, you're right. We'll approximate, around.
Exactly. And Chris, how about you?
Yeah, that was my plan, what Isaac did all along. I had no intentions on going to bed early, but I was flying in from Florida to Chicago, and I was flying on Spirit, and they delayed my flight a handful of times, and I actually didn't end up landing in Chicago until about midnight.
Oh, God.
So, yeah, so I missed all of the festivities in New Year's, and we had the countdown while in the air.
Okay, cool.
That's funny.
Niko, what did you do for New Year's Eve? I know you went to like Milwaukee or something, right?
No, Milwaukee was last week. The New Year's Eve, I was in Madison, Wisconsin, playing a country gig at this country bar. So it was a good time.
Okay.
I do like some country music.
Yeah, it was fun. There was a ton of people there, and it was a good show.
Are you a singer, Niko?
I am not a singer. I am a guitar player. So I was filling in with this new country band from Nashville, and they just called me. They needed a guitar player, so I said, let's do it.
What's the name of the band? I'm going to go Google him.
His name is Garrett Spear.
Got him.
Yeah, you can. He's on Instagram and Facebook and stuff.
Yeah, so the first topic I do want to talk about, I know Chris and Niko especially, they were already kind of talking about it, was a brand we all kind of like love. I know I'm wearing an Adidas sweatshirt right now, so it's like the biggest competitor. But one brand I do love the most probably would be Nike. I always kind of wore Nike clothes, shoes. Like most of my shoes that I do own will be Nike. But, last year or so, the stock has kind of been going down tremendously of what it used to be. I think it's more of a stock that should be like around the 140 range.
It's down 31% in the last year.
Yeah, so I think it's something, like I said, something should be like in around 140 range down to like less than $100. So real quick, Chris, how do you feel like Nike, like why do you think Nike's been going down, or what do you think Nike can do to get back up?
That's a good question. I mean, right now, I have the chart actually pulled up. Nike's trading at $73.67. And I'm sure Chris can touch on this. He actually just wrote about it in a Substack. But, they had some troubles in the executive level in the C-suite. Recently brought back one of the old CEOs who worked his way all the way up from being an intern, and they're really hoping that can have an impact. But I think, Nike's also, they're facing some headwinds that are not their own fault, right? So Nike has had some internal struggles, which we can touch on, and there's also some external, political factors, economic factors that have been weighing on them and are just adding a little bit of risk to their profile right now.
Mm-hmm. So would you say, I mean,
well,
I'm curious, do you think it's more of their fault, or do you think it's more of these other factors that are hurting the business?
Chris, why don't you jump in with your the CEO part?
So I'm gonna say, Nike shot itself in the foot. um, you know, regarding this recent downturn. They had the CEO that didn't work out, so they fixed that. I think that will right the ship long term. But some of the strategies they started implementing went away from their core business practices that were working well. For instance, as we were talking before the show, they kind of started focusing more energy in direct to consumer and cut off some of those long-standing relationships with retailers that they had for decades. And I think Nike overestimated how much of their business they would retain going direct to consumer.
Yeah.
So there was a lot of slippage there. And
So
then also they're neglecting the performance aspect of the brand and trying to lean more into the lifestyle, and that left more room for the newer brands like Hoka and On to steal away some of their
market share.
their market share in that high performance area.
So my question would be, do you think, let's say Foot Locker, for example, do you think they're going to be eager to do a deal with Nike again? Or do you think they're going to kind of, say we don't need you anymore?
Do you know Foot Locker was one of the ones they stopped distributing with?
Yeah, because I think that was. Let me see. I can look up exactly. I want to say Foot Locker was one of the biggest.
And I believe it's like
ones.
Finish Line too. But I think the main headline was them stop partnering with Foot Locker.
Here, let's ask ChatGPT.
Okay, yeah, I see it. I see it. Yeah, I see in February of 2022. That's when they announced it on Foot Locker's Nike or Foot Locker's earnings. It's hard to say right now, but I think from their perspective, maybe Nike thought that they had all the leverage, but once the retailers saw that, okay, you know what, maybe we don't need Nike, and maybe people will still keep coming to our stores to buy these other brands, and that's really what has played out. And so Nike overplayed its hand in that part. So I think Nike's probably going to have to, kind of beg for those spots back. Versus before, they probably had the leverage in those partnerships, but they threw it away.
So okay, so it looks like Foot Locker was one of their biggest, even though it says it's only 5% of their revenue, which is not that's not too big, but that's one of their biggest. And we have Dick's Sporting Goods, we have Nordstrom, Macy's, and Kohl's. So,
and I mean, losing 5%, that hurts,
Yeah.
I mean, I will say, right, from a pure business perspective, should Nike want to enter into a relationship with Foot Locker again? I mean, Nike's market cap's well over 100 billion. Foot Locker's is only 2 billion. So Nike has a lot of leverage, just being recognized, being a brand. There's a lot of business value that they can bring to the table and attempt to get their way back in should they want to.
Yeah, I mean, I think you can argue either way that they're actually helping each other out, right? I think with them working together, they're probably both benefiting business-wise.
Oh, I think so, absolutely.
So this,
the point being, should they re-enter? Does Nike have a lot of work to do, or is Foot Locker going to be looking to welcome them back? Right. That's an interesting question.
Yeah.
And
I think this is this downturn that they've had recently, though, and it's clear they're making moves to improve their situation by changing the leadership, and they're going to address these root problems. So that was why I wrote that article that I did today, kind of outlining, all right, it looks like we identify the reasons they went down. Now it appears they're a little undervalued, and as they fix all of these problems, we'll see the stock bounce back long term.
I sure hope so.
And real quick, also, I forgot who said it, but someone mentioned a word like the lifestyle of Nike. I think another big factor is Nike's somewhat losing its cool factor between like the youth and the younger people.
You think so?
I think even when let's say last 5-10 years ago, the biggest things in the world was like Jordans.
Yeah.
Like, everyone was killing themselves to buy the latest Michael Jordan, the Mikes, anything like that. Now it's kind of switched. Like every single new drop that I'm seeing, these new shoe prices, they're staying on the shelves. Like they're staying on the shelves. You can easily get them online for the same price. At the most, it might go up like extra $50 instead of it going up extra like $100, $200, if not more.
Why do you think that is?
Like I said, I think it's just how it is with like how people are with fashion.
I mean,
Like,
are they buying different shoes in place, or are they just
yes?
do they not have as much money?
I think it's just that people are not buying those Nikes as much as they are other shoes.
Yeah.
Like the main big thing in like fashion now
agree.
is kind of like those Balenciaga looking shoes. So those are going to be like the Asics that I mentioned already, and also New Balances. From 10 years ago, people were laughing and clowning someone if they wore New Balances. Now that's
add
what everybody
Skechers
wears.
to that too.
Yeah.
So it's kind of like a lifestyle thing though too, but it's like when they try to go more into the fashion with the price, it's kind of like it's not connecting people. And I think another thing is Nike doesn't have like those big stars like Michael Jordan and like that anymore. More big stars to wear that stuff. And when you're looking at now with people, the big stars are going to be like influencers. And what are they wearing? They're wearing Balenciagas or those Balenciaga type shoes, not Nikes and Jordans and things like that.
I think that same argument extends, to their clothing as well, right? And
clothing too, I think.
I think it's this is all empirical, but it seems kind of cyclical, right? I mean, growing up, Nike was the thing to wear. Nike was the coolest thing. Nowadays, if I'm walking down the street, it seems like everyone wants the latest Adidas or their Fear of God line and all of that stuff, right? And that's the hip thing at the moment, and it's definitely, that's definitely something that the Nike execs are aware of.
And then, like I said, the price of Nike.
I mean, fashion's cyclical, so it is, ebbs and flows. But right now, Nike's on the wrong side of it. But you know what that means. Like inevitably, they'll probably get back to their position of being on the right side of things.
Right, because I think you could argue that for a lot of fashion companies, it's easier for them to go out of style and maybe never make a comeback. But for Nike, who has been in the game for so long, I think they're probably one of the safer ones to bet on in terms of that. So,
yeah,
I'm waiting for the stock to go back up.
Yeah, I think just to put a pin in this, Nike's trading at about 25 times next year's, or I guess this year's earnings now, and their historical valuation is 30 times. So that shows that there's a little spread where they may climb back up to a more normal valuation.
Yep.
Totally.
All right, so
I would anticipate we'd see a little volatility likely before it climbs up. I mean, Nike, because of their supply chain, there's inherently some risk to that, especially with any potential tariffs coming into play there. Something that consumers might be sensitive, especially if the price gets passed on to them, especially at a time when Nike isn't the Jordan craze is in full effect, right? If that was in full effect, who cares what the inflation is? The people are going to buy them no matter what.
Yeah.
But that's something that Nike also has to balance and navigate going forward.
All right, what do you say we move on from Nike, jump over to Tesla?
Yeah, I would say we need a new. I feel like every single episode you give us like a Tesla.
Well,
update.
hey,
So
it's not my fault that Tesla is out there doing big things. Okay.
I should have like a little music thing, like a own segment to like ring in Niko's Tesla update.
Well,
big things until recently. Today kind of hurt them.
I know, right? I was actually surprised by that because I feel like we heard about that news maybe a year or two ago, but I mean, lately, with all the publicity that Elon Musk has been getting and with how much the stock has been running, you would think that everything is looking good at Tesla. But as of today, it looks like, sales were down 1%, I believe, year over year.
Yep.
I have some good guidance on Tesla because I've done some really big deep dives the last couple of years on it, and it's definitely a fascinating one. So about a year ago, it was like the beginning of 2024, end of 2023, Tesla was probably my second biggest pick next to Nvidia because of how undervalued it seemed relative to what it had been trading at the previous few years. So I had got in around 180.
Yep.
And then I was looking to get out in maybe the mid 200s or so. So that materialized over 2024. I thought like, okay, I bought low, I sold high. This one worked out well. I kind of thought it was at its peak valuation, around 250, 270. And then we saw Trump get elected. Elon Musk kind of was getting his
became
his
best friends with
spotlight.
Trump. Yeah.
And Tesla basically doubled
Yeah.
what my top line valuation for the company would be. So like this was like, even still, I mean, today corrected a lot of it that I was expecting, but it had been one of the most detached stocks from reality
Exactly.
that I'd seen since I've been following stocks. So I actually had my cousin call me last night asking me about Tesla, and I said, no, like, just wait, it's gonna drop down. He's like, I don't know, it already fell down a little bit. I want to jump in, but
Yeah.
the valuations don't lie. It was at an astronomical
It was
amount.
over 100 times earnings when the average for this stock is
Uh,
about 60. So I mean,
127 times 2025's earnings.
Yeah, I mean, it was
127.
It was ridiculous, and I've been making videos on social media about this for months, and pretty much everybody makes fun of me. Everyone says the stock's going way higher, and I was even surprised to see like analysts on CNBC were saying, oh, we have a $700 price target. I'm like, what's wrong with these people? The stock's not going to trade at 250 times earnings. So to me, this past 12 months of the stock chart reminded me a lot like 2021, where we saw the stock shoot up like crazy. It went to roughly $400 a share, and then it came down, and it went down, 75%. And I pretty much did a very similar thing as to what you just described, where you bought the stock at whatever you said, 170, 180, which was earlier, I believe, roughly a year ago. You probably could have bought it at those prices. Let's see, okay, so we're looking at about March, April of 2024. It was 175. So I was buying more shares then, and then I did the same thing. I started selling. I actually sold all of my shares at 260 to 275 maybe, and then after that I was just kind of betting for it to come back down, and it ran a lot further than I thought it was.
Yeah, I mean, just based on I kind of look at what was the lowest valuation it trades at each year.
34.
And if you average that, so if you average that out for the last 3 or 4 years, you could have bought Tesla on average at about 55 times earnings if you wanted to buy it at its lows. So that kind of tells me, okay, if they're going to make $3 a share in 2025, about 55 times that is $160.
Yep.
Today it's trading at 380.
Right.
So that's why I'm like, okay, this is so detached from like a best purchase entry point. You probably wouldn't want to buy anytime soon.
The people who always look at these things like Tesla, Bitcoin, Nvidia, Nvidia might be a little bit different because you might be able to argue that valuation is a little bit more justified. But for these other assets like Tesla and Bitcoin, where the traders kind of just keep trading it up based off of hype and momentum, and they're not paying attention to the valuation, I think the valuation is it kicks back in at some point. Reality kicks back in at some point, and these hype bubbles don't last that long. So right now, hopefully, I think we're going to start seeing Tesla go back down. And if it goes back down to 250, I'd be very happy, because then I could buy back in it where I sold. But we'll see what happens.
I think that's all legit, right? And one thing that's interesting with Tesla, and to your point about the valuations, right? If you look at it fundamentally just as a car maker, it makes no sense. No sane person would ever buy Tesla if you look at even just their PE ratio, which is insane compared to most industry standards or competitors. But to your point, with a lot of people who own Tesla, they're also interested in Bitcoin and Nvidia. It's a lot of people who maybe view it more as a tech company than a car company, right? And as a potential disruptor, and they're trading on the hype that Elon Musk is going to get some deal with Trump, and this is going to happen, or Elon's going to release a new, who knows what he's going to do next, right? Elon has a very boom or bust kind of mentality, and people love that in a sense sometimes.
Yeah, and I mean,
obviously he's someone you don't bet it. He's someone you don't bet against long term, but doesn't mean in short term you could get burned by his insane volatility.
And I mean, I get the whole Trump thing, but at the same time, what more can Trump really do to turn, like, Tesla's already a $1.2 trillion company. So I mean, besides doing some tax credits or something like that, I don't know. I can see where maybe some of the laws will be made in Tesla's favor, or maybe Trump will work with Elon to do something, but I just don't see a scenario where it's really gonna double the stock price or anything crazy.
I don't either. From a pure auto business perspective, they'll be successful. They'll be just fine. They are successful, but they're not gonna blow up, right? The Tesla hype that I think a lot of people have is they're gonna disrupt with some new technology that we haven't seen yet, and until that comes out, it's gonna remain highly volatile.
I mean, I don't like to speculate too much, but at the same time, when you look at things like the robots and you look at things like the TAM for robotaxis, then I can see it possibly being a $3 trillion company at some point in the future. But right now, I think we're getting too far ahead of ourselves, and I don't think it's ready to be a $3 trillion company just yet.
I agree wholeheartedly.
Second that.
Well, okay, Josh, I don't know about you, but I think that's enough Tesla talk for me today. Would you like to move on to the next company?
I mean, one thing I just do want to add about Tesla. When are they going to start making like cars that like look cool?
They started that 10 years ago.
No, like that I would actually like.
I don't know.
Like not a Cybertruck.
Something. I would say the only model that I really like is the Model S. That's the only one that I really like. The one that look like a long sedan. That's the one I think that's okay.
That one's sleek. Same with the Roadster, their first car.
Yeah.
That one was nice.
The Roadster's like the really fast one, right?
Yep.
The plaid model is that the
Yeah, they made that in like 2008 or something. Whenever they first made their cars.
Yeah.
But yeah, hire some more guys for like I don't know, like Lamborghini to design them.
I don't know. I don't think they're having. I think they're doing pretty good with sales. I mean, I think the Cybertruck was one of the most pre-ordered vehicles of all time.
It was.
So
it's almost like they lean into and have success with what I'll call a meme appearance.
Yeah, I agree with that.
I see that.
Yeah.
All right. So the next thing on our list we got is an overvalued market. So what do you mean by that? Are you saying like how overvalued the market is now?
Yeah.
Okay, yeah. So I do agree with that. It is super overvalued, and that kind of is like going into my prediction for this upcoming year. Is how I think a lot of it's going to start going down a little bit. Though.
And I mean that's why I'm now again this is something that I've been calling out for at least probably a couple months at this point. So again, I'm a little bit early, but well, I mean the market's been falling the last couple of days, I guess, but I'm expecting let's say I would say at least 15% drop. I mean. The NASDAQ falls a little bit more probably than the S&P, so maybe 15% drop in the S&P, 20% drop in the NASDAQ, something like that. And when that happens, then I'm ready to load up on shares because right now I've been sitting on probably 80-90% cash or something like that, just waiting for these valuations to come down.
And I don't even think that's bad. Like what those numbers you're saying, I don't think it's bad. I just think the last 2 years have been so high.
Mm-hmm.
With all the numbers.
Yeah, I think the numbers were back-to-back 20+% gains in the S&P.
Yeah, it was.
I feel like the NASDAQ's probably even more than that.
Let's see. So right now the S&P 500 is trading at 30 times earnings, and the last 10 years its average is 16.
Yeah, exactly.
So we're almost at double its average valuation, which is definitely concerning.
You almost think the market's just waiting for a shock for people to start taking their profits and leaving.
Yeah.
I kind of already started.
So. Yeah, I mean that's like very detached from reality.
I think
definitely eager to see what happens with that.
For me, there's three main reasons. The first one is the PE ratio that we just mentioned. The second one is the fact that on average every 2 years or so we have a correction, which means 10 to 20% drop. And the third one is that Buffett is sitting on, I believe, at least 25%, around 30% of his assets in cash, which is the highest it's been since, I want to say, even the financial crisis. It's higher than what it was back then, 2007, 2008. So that's just another sign that, Buffett realizes there's not many deals out there right now.
There is something to be said of just do whatever Buffett does and you'll be fine.
Hey, he been doing it for a long time.
Yeah.
Like how old is he? Like 97?
Something like 94 or something like that. I don't know.
Yeah, but I mean, even just doing my one-off analysis that I mentioned, like I did today, I just remember seeing so many larger opportunities, this time last year and
Yep.
especially the year before, where that's all seemed to have kind of evaporated. Now these just seem like, for the most part, I've got maybe, 4 or 5 good opportunities.
Yeah.
Whereas at the same time, those years I was looking at maybe 10 to 15
Yep.
of this caliber that I like. So,
Yep.
it's a little bit of a subjective thing that I'm seeing right now, but I think it speaks to this broader
Right.
broader
Yeah, I mean,
headline that
it's just
we're
it's
seeing
harder
right
it's
now.
harder to find good deals, and it's harder to find stocks that are trading below their median PE ratios. One of the ones I bought today was Adobe. I started buying some shares of Adobe because that one is looking pretty healthy right now, in terms of valuation. In terms of their business, I still go back and forth sometimes between, how strong is their moat really and how serious is the competition. But, most of the things lean into Adobe's favor. I think, right now they're sitting on a lot of cash, and they still have huge market share. They still have great technology. So, I'm still happy to be a buyer of this stock for right now.
Those are all the things that you have to weigh virtually every time there's an undervalued stock. It's because it's undervalued because something's not going wrong, but
Yeah,
there could
right.
still be things going right. So it's kind of you weighing those all out and saying, okay, do you think it will at least get back to normal?
Yeah. Yep. And then, you got other ones, like if you want to buy Microsoft or Amazon or something, I think those are still great stocks to buy. You just got to be careful with what price you're paying. But,
Similar to the Tesla, you don't want to
yeah,
buy it when it's detached from reality.
yeah. And I don't know, with the company like Amazon, I think, it's still going to, if we have a correction, those stocks are still going to drop. They might not drop a ton, but they're still going to drop some. And then, once you have that over with, then I think the futures of those companies look fine. So those should be, great investments for the next 5 to 10 years at least.
Yeah, they always have those one-offs though too for those big companies where, okay, every so often there's going to be some catastrophic thing that
Yep.
happens, like a huge
Take
monopoly
take
lawsuit.
take Boeing.
Yeah, Boeing's a
Or
disaster.
I mean,
A real company.
Don't even tell
I
Josh
mean,
about that.
Hey,
Josh has been talking about
They're-
Boeing.
more so operationally challenged as a
Yeah.
company versus having like one-off external things like coming at them.
I
it's
thought it was pretty funny. I read an article this morning. Boeing started 2025 the same way they started 2024 with a plane crash or failure, and man, they're
well, no, it's
ridiculous.
weird. It's what's been going on the last week or two with all these plane accidents.
it is wild. One I thought was due to a bird strike upon landing.
Uh-huh.
The others I
Can you
admittedly
guys talk
don't know
about?
much about.
I only saw one brief headline on the news, so could you share more?
I saw at least
What were the series?
I saw at least 4 in the last 10 days probably.
Because it's not real. It's not.
You don't think it's real?
No, it's not real.
I don't know. I've seen them all over. Maybe they were fake videos, but I've seen them all over.
There,
I just
there's
have to
two.
have the
There's
one
the Boeing one I know of.
theorist.
There's the plane. I think it was in Malaysia. They basically, I think they had a problem with their landing gear, and they landed, but they weren't able to stop in time, and the plane crashed into a barrier at the end of the runway.
Mm-hmm.
And that was the big one where I think all but 2 people died.
Yeah.
Mm-hmm.
Then there was some like small prop in Canada, I think, that crashed, but I think that was unrelated to anything, safety or like not sound mechanics wise. I don't know much about it, but I think it was a non-commercial.
Maybe we're just hearing about all of them now that it's hot in the news.
People do enjoy pushing narratives when the opportunity presents itself.
Yeah, that's true. That's true.
Yeah.
Okay, I'm curious. What is your guys' opinion on crypto right now?
Well, I've always been on the stance that it's 100% speculative. It's like gambling.
Mm-hmm.
Not necessarily what I choose to do with my investment capital.
Mm-hmm.
I bought when it was hot in, when was this? When we were in high school, maybe in 2017.
Mm-hmm.
I bought what do you call it? Didn't buy high, didn't buy low, but I definitely bought and sold at a big loss. So I think I was kind of scarred from that. And I'm like, you
Yeah.
know what? This
Yeah.
isn't fun.
Yeah, I get it.
Because it wasn't like, when it goes down and like, for instance, when a stock goes down, I can look at the fundamentals of the company and kind of make a case for myself. Okay, like, do I reasonably think that this stock will rebound to a normalized valuation? Or maybe it has its business fully deteriorated and I should sell. Whereas with Bitcoin, it's kind of like, I just don't know. But you know what? Nevertheless, it is at like $100,000. So
Yeah.
what
Yeah.
do I know about anything?
And you know what? Going back to signs that the market's overvalued or that we're in a speculative bubble, I read this something on the internet that said, you know it's time to sell and start sitting on cash when you have your friends coming up to you who don't ever invest, but they're telling you, hey, go buy this new crypto. And then like the next day,
Yeah.
I hung out with one of my friends. He's like, you got to buy this XRP. He's like, it's going crazy. And I mean, when you look at the XRP chart right now, it's in the last 3 months, it's up 347%. So he told me this when it was about $1. So I put a little bit of money in there at $1, and then next thing you know, I think, who knows, within a couple of weeks, it had ran up 50% or something crazy. So then I sold.
You ain't tell me about it.
I'm sorry, I forgot. So, but I took my profits real quick and then ran, and I mean now XRP is at $2.40, because I mean I think it's the third largest crypto after Bitcoin and Ethereum, but the use cases and the technology for these cryptos are interesting. But how you said, to me it's still like it's not the same thing as buying a stock, and it still seems riskier and scarier than buying a normal asset.
Like that exact story that you just talked about is the reason I'm scared of cryptocurrency.
Yeah.
That exact.
Totally.
All right.
story.
Well, also we know that compounding returns exist. We know that fast forward several decades, your money will multiply to a number that was probably more than you could fathom. So it's kind of like you have surefire ways of guaranteeing like financial security for yourself down the line. Like, why not just buy into that,
Yeah, I know.
to the sure thing, instead of
Well,
spending so much time and energy on something that's just like pixie dust?
because people are going to tell you, if you look at the last 5 years of the stock market index, it's going to be up what 130%, 140%. If you look at the last 5 years of the XRP chart, it's up 1,200%.
So no, you know why though? Because we are a gambling society.
Yeah, right now we are.
Right.
Right now.
Gambling society.
But let's come back in like 6 months from now, 9 months from now. I bet we're not. I bet everybody is scared. Everyone's telling you to sell, and we'll see.
No, I think that sports gambling stuff has
that's a big
it's got
thing
like
too.
a whole generation. That's all
Yeah.
in the mind.
Totally,
Gambling
totally.
trying to get quick rich schemes.
That's true.
Is all it's about.
That's true.
People love them. They're suckers for them. I mean, generally I'm anti-crypto, right? I actually have never owned Bitcoin until a couple months ago, and I finally bought a very small amount. And the only reasoning behind that being, the dumbest thing you can do is have 100% of your assets in Bitcoin. You're gonna either become the richest man on earth, or you're gonna be living on the street in a few weeks.
Yeah.
But at the same time, right? It's also pretty, it's pretty unhealthy, or not unhealthy, pretty dumb as well, I guess, to have 0% of your assets in crypto, right? So
Yeah.
having 1% or a very small amount in it, I think is an appropriate move if you do want to get invested, get interested, and take the story of the guy from way back in the early 2000s, I think, who bought 2 Papa John's pizzas
Yeah.
with Bitcoin, and the guy would have been a multi-billionaire now.
Yeah.
So there's nothing wrong with having a small amount of cash that you can easily afford to lose in crypto, but I think that's the only real value there.
Yeah. Yeah, I mean, I agree with that. I mean, you see people like Warren Buffett that are so against, the cryptocurrency like Bitcoin. But I mean, I feel like I can see both sides. Like I can see the use case, but until it like becomes more mainstream and established, then I don't know, it still seems just kind of iffy. I mean, especially when you see the volatility the last couple of years where it can drop whatever, 70%, which generally the stock market, the indexes are not going to do that. But when an
Totally.
asset is dropping that much, it is scary, because those are big drops where you got to be ready to go through those, especially when you're buying at prices like 100,000 when it's near the peak. Then you got to be extra careful there.
Yep. And crypto, while there is the technology that makes it unique and you can accept it as payment, all that good stuff, fundamentally, it only has value because people give it value.
Yeah, exactly.
And that can go away in an instant.
Yeah. It's like buying it's like buying Jordans. It's like one day they're popular, next day they're not.
That's right.
I know now kids acting like they dad shoes now. The New Balances are the new craze. But to jump around this list for our next topic, this is the big news that's going on. I feel like it's past like year or two, a whole bunch of people have been talking about it. But TikTok, the most popular apps maybe in the world, especially in the world, but probably ever.
Don't tell me it's getting pulled off.
I was going to ask you, do you really think TikTok is going anywhere?
I've seen 50 articles say that, but everybody I ask, they say, "Oh no, it's not." They say TikTok's here to stay. So I don't know. If I had to make a bet on it right now, I'd probably bet that it's going to stick around. Maybe it gets a different owner or something. But I would bet it sticks around.
It already got sold, I think. So
yeah,
it had like full Chinese ownership. Now I think it's kind of split. There's a lot more American business people that owns it. So
yeah.
I think that was the main big thing. Like people say, "Oh, Chinese, they're taking our whatever."
Yeah.
I think America just wanted a piece of that pie.
Exactly. Right.
So I think they got it now, and I think when Trump, I think it's supposed to be like January 20 something. Like it's supposed to be shut off. But I think
Trump, no, yeah, it said January 19th was supposed to be their last day or whatever.
Yeah, it's gonna be like a law get passed. They wait another 6 months, then Trump is in office, so he's gonna be like, "No, it's thing."
And then Trump was very anti-TikTok, last year, and then now I heard he's switched. I'm not 100% sure on that, but that's what I've heard.
Money talks.
Yeah, I guess so.
Money does talk, especially for Mr. Trump.
Yeah.
So how about Isaac, Chris? How y'all feel about is TikTok going away, or can we still sing and dance and make our little whatever on it?
I don't sing and dance on there. I make stock market videos.
That and get cussed out too. We do that.
Yeah, I do.
Out, everything.
I do. Yeah.
I don't think Trump would lie about this. So, maybe it will go away. But you know what? Also, people probably have ways to get around it, like maybe VPNs or something. So maybe there's a company that comes around and makes it very easy for you to still have TikTok.
Yeah.
I think there is enough consumer sentiment in favor of TikTok that they will be around in some form, despite any legal action.
Right. Yeah, I agree.
And real quick, I will say to add to what you just said, Chris, I think he did say ask like the policymakers to hold on getting rid of TikTok. So I think that's what Trump was saying, if I could remember correctly. But yeah, it's gonna stay.
Okay, what do we got next?
Yeah, so the next thing we do want to bring up real quick is I know y'all got to go, but market predictions for 2025. So I'll start with me real quick. Like you probably already know, I think everything's going to go down. I think we're going to have a recession. I think
you say that every year.
This is going to be one of our worst years ever when it comes to financial things like that. So I think it's going to be all overcorrection or whatever for 2025. But that's just me though. Yeah. Niko, how about you, real quick?
Yeah, I feel the same. I think.
Oh, so now you with me?
Well, I'm with you now that the market's overvalued. I don't just predict a recession every year. So
okay, I might be going crazy with recession, but I did say the market's gonna be too high for like the last 6 months, and he said I was crazy.
Well, I know. Sometimes you predicted early. I think in 2021 I predicted that the market was gonna crash, and it didn't happen for another 6 months or 8 months. So sometimes you're early. It happens.
So I'm not gonna say that it's gonna have a recession because usually we don't have recession. So I'm gonna bet on the side of what the stock market usually does. I think we'll return more to its usual 10% or so gains, down from our 20 to 30% a year. But I definitely would not be surprised if this year shakes out to be a down year based on, I said like 30 times PE ratio right now versus its historical average and mean hovering around 15, 16 times.
Yeah, it's crazy.
That tells you that there's something wrong with the valuation right now.
Yep.
Yeah. I'm a little bearish, not as extreme as you guys. I think maybe a 5% decline. I don't think we have negative GDP or hit a recession or anything like that.
Yeah.
But I think there's two kind of drivers that are going to make it difficult for consumers to keep propping up the economy with their spending and to keep, those valuations high. And I think one is, inflation's being a little tricky, staying above 2.5%. I think it came in at 2.7% most recently. So the Fed's gonna, they're probably, and they've indicated this, they're likely going to scale back on their rate cuts. We might not even have any rate cuts in 2025. That's highly possible. They're going to keep monitoring both the labor market and the inflation to do that accordingly. And I think, personally, I think the Fed's done a great job so far getting us to where we are, and that's the main reason why we haven't hit any downturn yet and why the market was able to run so much. But I think, combining that the Fed is in a slightly, I'll call it slightly sticky spot with inflation, right? It's not bad, but it's higher than they want. And I think you add in the risk that we might see, tariffs coming into play in the upcoming years, and tariffs are, economically inflationary. I think that would just add more pressure. I think we see, that just put downward pressure on the market as a whole, and we likely see no gains or a slight decline.
Yeah, I mean, if you remember, last time Trump was president, and this tariff situation played out, it definitely had some weakness in the market. It doesn't mean that this time it's going to be the exact same. I would think that,
right.
Maybe, I don't know, maybe Trump approaches it differently. Maybe, who knows? But yeah, how you said it, there's a good chance that it'll create some inflation. And yeah,
I think people were like speculating that that'd be very bad. Like, that's the main thing. Those tariffs going to ruin the country.
That's what they say.
I think because Biden didn't really do anything to like change them. So the same tariffs that Trump put in place, Biden kept those same.
Yeah,
tariffs
but Trump wants to.
Then you're going to add more into it.
Yeah, Trump.
That's what the big problem is.
Yeah.
Yeah, and it's, who knows what actually is going to happen when his administration gets in office and they start implementing things, right? That's one of the risks right now, is it's highly, I think, unknown. Other than he wants to do it, right? But percentage-wise, on who, on when, on what, right? That could all change between now and then. I do think generally, though, it puts additional pressure on the Fed, and when the Fed is pressured, that's when the market is in a tricky position.
Now, the other thing that actually helped the market out last time was when Trump cut the taxes for the businesses. I don't know if did Biden raise those back?
I believe a lot of the tax cuts that Trump put in place are still in effect.
Okay.
I believe they're set to expire in the upcoming years. And I think the anticipation is that Trump would either renew or further those cuts, which would be very pro-business.
Yeah.
Right.
Yeah. Okay, Josh, why don't we jump to Subway?
Yeah, let's talk about Subway real quick before they
How much time you guys got left?
Let's make this a quick last one, and then sign off.
Okay, cool.
Good with me.
Hey, Niko, so what's going on with Subway?
Well,
Is that your favorite place?
I never thought I'd be buying this stock, but I happened to start making a position in Pepsi because the PE ratio was cheap. I saw that they signed a 10-year deal with Subway to replace Coke products with Pepsi products. So it just looked pretty compelling to me. I figured it's if interest rates keep going down, then it's nice to have a dividend coming, which Pepsi pays a dividend. And I said, okay, the stock's at a pretty cheap PE ratio, and I figured, how much can Pepsi stock really go down? So I see it as a low-risk stock, and that's it. That's why I bought it.
It's like
We're talking about Subway or Pepsi?
I don't think you can buy Subway. It's just Pepsi.
Subway's private.
Yeah.
Okay. Also, I mean, if you guys have eaten at Subway, I think Subway is not what it used to be.
No, I haven't eaten at Subway in a long time.
I like their cookies.
Subway is funny because I've rarely talked to someone who enjoys Subway. I think Subway's awful. I avoid it like the plague. But they have the most physical restaurant locations out of any fast food chain in the U.S. by far. And to your point, the fact that Pepsi is now the sole provider in a multitude, thousands upon thousands of restaurants, which do generate business somehow. That's a lot of money coming in for Pepsi.
Well, I think their strategy is just to have so many locations where somebody's forced to eat it because no matter where you go in the country, it's there. So
Right. Yep.
that's probably their main strategy. But I ran the numbers on this. I think they have over 20,000. I forgot the exact number. It's over 20,000 locations. But I want to say for Pepsi, it brings in like $700 million or something like that. It's a number like that. So it's a pretty significant, even for a company as big as Pepsi, it's a significant amount of revenue.
Yeah, no doubt.
Coming from 20,000 locations, it's going to help. So,
and that's guaranteed revenue too, to an extent.
Yeah. And 10 years is a long time.
Yeah,
that's a long deal.
That is. I don't know if that will make Pepsi's stock grow significantly, but it certainly gives them a very high level of safety.
Now, somebody on TikTok was arguing with me about this. They said that Costco is doing the opposite. They're taking out Pepsi for Coke. So I don't know about that. Maybe that's true. And even if it is true, okay, well then they got one good deal, one bad deal. Big deal.
Coke is like a bigger company than Pepsi, though, right?
Probably.
Because you just brought it up. I'm trying to bring like what fast food places has Pepsi besides them and like KFC. Then I'm trying to think like who else like is only like Pepsi.
I don't know. But the forward PE on Pepsi right now is 17.5, and over the last couple of years, it's been anywhere from 19 to 21. So it's below average. So
it's just a little spread.
Yeah, and I mean it's a low risk stock. I don't think it's going to drop 50%. So I'm not too worried about that.
No, and they have a well diversified portfolio. More than just drinks, right? Snacks, all that kind of stuff that people will continue to buy.
Yep. Okay, I say to end the show, we each pick one stock for our stock picks for 2025.
Okay. I guess.
Well, I already have mine.
Yours is
you
Nike.
You want to go first, though, Josh?
You want me to go first, or you all?
I'll take it. No, it's the article I wrote before Nike. It's Jack in
the Box. I read that one.
There we go.
Yeah. So, just high level, Jack in the Box's historical valuation runs 17 to 18 times, and it's currently trading 5 times 2025's earnings. So, I mean, 5 reverting back to 15 plus, you're looking at an opportunity to easily double or triple.
Yeah, but the issue with this is the last 2 quarters they lost money, and the last couple of years their revenue and net income has been trending down. So I am concerned.
So they lost money on those were non-cash charges that they lost. Looking at FY24, so that was like a goodwill impairment against their purchase of Del Taco.
Oh, that's right.
So operationally, they're generating very strong profits. So I think that's going to smooth out over time, especially as the non-cash charges kind of wane off. And then also they're facing, as you saw in the article, like labor increases in California, where they have about half the restaurants. So as they're able to increase menu prices over time and business kind of stabilizes out there and inflation gets resolved a little bit more, the company's going to return back to
so let's
a
see.
much stronger position.
So we're looking at last year's revenue of 1.2 billion, and then prior to that their net income was 130 million, and the market cap's only 770 million. So this is saying forward PE of 6.8. So I mean, it's about as cheap as it gets.
Yeah, and I mistakenly said 5 times this year's earnings. I meant to say 8 times. So still a good opportunity to double from here over the next year or two.
Yeah.
But yeah, it doesn't, like I said before though too, it doesn't come without concerns. The company carries a lot of debt.
Yep. I see that.
So it does need to execute on its plans and manage the debt effectively for everything to materialize.
Yep. Okay. Next person.
Isaac, how about you?
Let's do it. So my pick would be a stock called Brown & Brown. If you're not familiar with them, they're an insurance.
What's the ticker?
BRO. They're an insurance brokerage company, and a couple reasons to pick them, right? I mean, if you look pure valuation wise, their PE ratio right now is 27.4, which is pretty much roughly in line with the past 5 years. It might be a little high at times, but it's not. I wouldn't call it overpriced. I wouldn't call it underpriced. This is probably a pretty fair value stock at the moment. But I mean, a lot of the reasoning for the purchase would have to do, with what we were all saying with our market predictions, right? We're expecting maybe some correction, some downturn, some volatility, and the nature of the industry and the business that Brown & Brown operates in, they are very well equipped to handle it, right? I mean, their beta is quite low. They aren't as susceptible to the big swings, the big volatility, and insurance is something that everyone has to have, right? It's not like demand for it is going to disappear. And the company as well, they've been very effective at growing. I actually consider them a growth stock. They've been strategically pursuing a lot of mergers and acquisitions, growing their market share, and really eking out new spaces and new markets across the country, which is very positive when you want to see a stock with growth potential. And I do think even if the market is in a rough spot, I think we'll see them grow 10 to 20% over the next year.
Okay.
You want me to go first or you?
You can go, Josh.
All right. Does that have to be like
don't
a
say
one,
AMD.
I'm not gonna say AMD. You sure don't want me to say AMD?
I feel like you say AMD every year.
Because it's been doing well. When I said it last year, it went up. I said NVIDIA, it went up.
I remember that.
Yep.
I remember you said AMD, and we talked offline about this, and I pulled you up the chart of NVIDIA before it had popped to the levels it's at today. And I was like, look, man, you got these two similar stocks. One looks much more fundamentally sound. And that was NVIDIA. And AMD was the one you were vouching for, even though it wasn't as fundamentally sound.
Yeah, so I actually.
But let's hear the case for this year.
I actually did go ahead and buy NVIDIA right before it blew up, so that was a good one. So I had AMD in NVIDIA, but I think for this year I'm gonna go with Broadcom. I think Broadcom, and I think this is a big one, but I say Google. I think Broadcom and Google, when it comes to AI, those two are gonna be like the main hitters with that one too. And I brought Broadcom in December for 180. I think it's already up to 230, 220, 230 range.
Okay.
So I say Broadcom going into the year 2025.
This is a tough one. There's a couple I could pick here. If we're talking about stock picks that are currently at a good valuation, then I'm gonna do two. My big one is gonna be ASML. My smaller, riskier company is gonna be Celsius Energy Drinks. Those are my two. Celsius is kind of like a riskier, turnaround gambling sort of bet, and then ASML is one where I'm much more confident in, and that one I got a large position in that. So
Oklo is my one if you want to gamble. Oklo.
Oh, okay, I know that one. Yeah. Okay, I almost said Target, but Target has already. I think it's already starting to move up a little bit. But if you bought Target at let's see, what price did I buy it at?
Last year, so I didn't get his. I hit his.
Not even last year. I bought it at 120. So if you bought it at around 120, then it was a good risk to reward. But right now it's starting to move up. So I don't know. You already lost out a little bit.
How about Starbucks?
That's another one. That's another one. That one is not bad. It's a similar story because the brand is so strong that I don't see that one really failing. It's just that one reminds me of Nike. It's just a matter of turning things around, managing a little bit better, controlling the prices and stuff. But Starbucks is another one where that's a fair play.
All right, so I think this concludes this episode 61 of Stock Talk with Josh and
Niko.
Yeah, almost forgot your line. Huh? But yeah, real round of applause for our guests. Isaac, Chris, thank you all again. Put this camera on you all. You guys got to say anything else real quick before we leave?
Hey, thanks for having us. This was a great time.
I'm just going to plug my investing blog on Substack, so I'm sure you guys will link to it in the show notes.
It's a good read. Go give it a read.
Yeah, just send us text us a link and I'll make sure to put it on there.
Yeah, thanks for having us again, though. This was fun.
Thank you guys for coming on.
All right, but yeah, for everyone else at home, listening, tuning in, I think the audio version will be live sometime on Monday, and then we'll also be on the radio too. So, but once again, y'all have a good one. Stay blessed. Enjoy your year. Please be safe out there, and to many green days ahead. Bye-bye.
Bye.